a context for our guests to have a holistic idea, so that when the discussion starts, we are able to flow seamlessly, and there is a proper understanding, and we will not be communicating over the top of the heads of our guests. So in providing the discussion today, we will know that a lot of times, or it is generally known, that women are considered the backbone of the African economy. And in fact, research shows that the African continent has the highest percentage of women entrepreneurs in the world. According to the Global Entrepreneurship Monitoring Women's Report, I think it was conducted in 2016 or 2016, yes, or 2017, female entrepreneurship rate in sub-Saharan Africa alone was about 25.9% of the female adult population, meaning that 1 in every 4 women, starts or manages a business. And it is in this connection, the African Development Bank research conducted, the research that was conducted by the African Development Bank revealed that a significant $42 billion financing gap for African women across business value chain. And so because of that, the Affirmative Finance Action for Women in Africa, what we call AFAWA, that initiative was created to bridge this $42 billion financing gap for women in Africa. So, and the aim of the AFAWA initiative is to bridge the gap by addressing systemic barriers relating to finance, capacity, and the business environment. When we talk about finance, we talk about where financial institutions or development financial institutions lending money to women is seen as riskier. So there's a tendency that women face prohibitive interest rates, or we find that women often lack traditional collateral and guarantees when they are applying for some of these loans, which we all know is a part of our patriarchal system. And then when we talk about institutions, a lot of times lack the capacity to understand and respond appropriately to women entrepreneurs who they believe are not exactly investment ready, as they are often assumed to lack the financial or business acumen to respond to the needs of general requests of the financial institutions. And then when we come to the business environment, as we all know, in many African countries, legal and regulatory frameworks tend to hinder the general participation of women in when it comes to private sector growth. So all these systemic barriers show that women are perceived as not investment ready. And this has been a narrative for very long. However, from our work with some African countries, we found that this is not entirely correct, or it's not entirely true. And there is a need for us to change that narrative because we believe that female entrepreneurs are not unready. Rather, they are more or less under-recognized risk managers as opposed to the general perception. So every day we find women navigating different uncertainties, facing challenging systemic barriers, and these barriers help them come up with remarkable creative ways of addressing these challenges. And they show some level of strength and resilience. And so we believe here at Sociocapital that financing the gap just goes beyond saying we're asking the question if women are ready for that kind of investment and all of that, to the ability for these women to be able to navigate some of the barriers. So we now come up with the question, the question we now have to answer here is, how do we as ecosystem organizations and female entrepreneurs of women in business, how can we take advantage of this opportunity? And this is where, when we talk about resilience capital comes to the fore. Resilience capital is that powerful mix of adaptive leadership, risk intelligence, and supportive networks. All of these combined together help women thrive amid all of these uncertainties. And so through the Growth for Her Consortium, as Linda had earlier mentioned, we implemented an accelerator program. This Growth for Her is a consortium of partners from Nigeria and Cameroon, with Sociocapital, creative spaces, startups. We had the Learning Gates, we had WeTech. All of these people came together to form and develop or co-design the accelerator program for female entrepreneurs, and with the support of the AFAWA initiative. And with this experience, we saw firsthand that by integrating risk preparedness, mental well-being, psychosocial readiness, all put together, we were able to support over 300 women across across Nigeria and the Cameroon, and the results were very good, with a very good percentage increase in risk awareness when it comes to female entrepreneurs understanding certain risk and helping them to make decisions confidently. So having had this experience, one other thing that came up during our experience running this accelerator program is that often after most accelerator programs end, the support often ends most times. So there is a post-accelerator gap. This is one opportunity that organization within the entrepreneurship ecosystem can take advantage of. So in other words, no sustained mentorship, no continuous access to either psychosocial or financial guidance. And we find that these women who have gone through this process still go back and still have some difficulties. And so our goal here is to ensure that we create an opportunity to build resilient female entrepreneurs in business, not just ready business owners, but we want to build these resilient female entrepreneurs to become a new standard of success. And so because African women entrepreneurs will not be defined by who is ready for capital, but who can be resilient in the face of challenge and change. So we through conversations like this, we want to build a future where we believe that every entrepreneur is resilient ready, they are opportunity driven, taking advantage of all the opportunities that are made available. And that is one of the reasons why we are hosting this webinar today. Thank you very much. Over to you, Linda.
Okay, thank you very much for that very insightful context, Sharon. I believe by now we all understand why it is important that we have this webinar, right? So, okay, before we jump into the discussion, let me quickly share a few housekeeping rules so we can make this as smooth as possible. Okay, so here's how we are going to run things today. Keep your mics muted, please, unless you're speaking. This helps us avoid background noises and keeps the audio clean for everyone. Use your hand if you have questions or comments during the Q&A session. We have a dedicated Q&A session towards the end of this webinar. But if something urgent comes up, please feel free to drop it in the chat anytime, and we'll have that attended to at the end of the session, or any of our panelists would address it as they speak. This session is being recorded, so if you have the need to step away or want to visit any part of the conversation later on, know that you would have access to the recording. So yes, back to you, Sharon.
All right, thank you. So without wasting so much of our time, we'll just proceed straight into the discussion. Thank you once again, Ifwa, Grace, and Christine, for taking out time from your busy schedule to be a part of this discussion. So as a way of setting the scene or starting this discussion, I will start with you, Ifwa. My first question to you will be, do you think that the narrative around women's enterprise financing has evolved beyond the old paradigm of investment readiness? If so, then provide us with the context, and if not, then why not?
All righty. Thank you very much, Sharon, and then the team. Good morning again, everybody on the call. You know, in preparing for this conversation a few days ago, I was constrained by the phrase investment readiness. You know, it seemed like a very deliberate manufacture that has been used to cloak women entrepreneurs. And I had to ask myself, has this ever been applied to men? Do people ever say men? Do you have a conversation around the investment readiness of men? You know, I work a lot with community stakeholders at the grassroots. So you will forgive me if my presentation today is going to be as realistic as possible. I was of the assumption that the audience was going to be, and I still think a lot of women entrepreneurs, you know, and I believe that if this is recorded, perhaps one day it will land in the right hand. So I want to make it as simplistic as possible. So investment readiness, yes, I think conceptually progress has been achieved, you know, in terms of, you know, but in terms of practice, there's still a very huge lag. You know, generally speaking, that whole conversation has shifted from investor checklist towards understanding that women-led businesses or enterprises, they possess some very high functional resilience naturally, instinctively. Now, I would always look at the women that the bucket of stakeholders that I'm quite familiar with, you know, at the grassroots, the underserved community. There's a lot of informal, you know, conversations around those places. I see a lot of these women-led businesses who maintain diverse revenue streams, you know, they have very strong customer relationships and have effective cost management skills in their businesses and in their enterprise. But you see, they're operating in an environment that is quite disadvantageous. The narrative has moved, definitely. I agree with you 100%. It's a practice that we need, agree that needs a lot of catching up, you know, to do. So the mainstream still looks at, you know, all the due diligence checklist, you know, financial forecast, you know, collateral, you know, and all of those things. And in determining what you call investment readiness. But if you really want to go by the AFDB research and unlock this resource that is available, we have to think a little bit beyond all of that. You know what I'm saying? So for us, there's a lot of things that have been missed, you know, by the traditional fund managers or capital owners or resource owners. You know, they don't quite appreciate all the local. They don't appreciate risk navigation in the local context. You know, how women down there manage risk in a non-traditional way. than that we all are used to in the boardrooms and in the risk departments in the very big corporations. You know, I work with a lot of field teams, and you know, in trying to put together our own baseline data for the things we do. You know, I mean, let me give a bit of context. My focus is upstream oil and gas operations. So we try to ensure, and we have a mantra in my business where we say shared prosperity. So the whole idea is, as we prosper in the barrels of oils, we try to ensure that local, you know, capacity is built. And I have a bias for women groups because all the men groups are the ones leading all the big contracts, local contracts, you know. So, but if you really want to touch a community, if you want to maintain peace in a community where I do business, where we do our operations, touch the women's, touch the local women businesses. And even when the men are agitating or the youth want to agitate, there's always this pause because, you know, they feel like, so you solve the problem of women entrepreneurs in a community, you literally have everybody aligned. So that's a bit of our focus. That's why we have this understanding. And they build very strong informal networks and, you know, have a way they do their own business at local level. These women entrepreneurs, they have skills, certain skills that, you know, would equal managing what the conventional credit scoring companies would need. But you see, investors, fund owners, fund managers rarely credit those things. If we pick a little thing as what we call the Ususu, I'm glad that most research institutions in the world are beginning to focus on these local concepts, you know, with regards to how local individuals, particularly women, you know, operate some sort of structure that, if well adopted, would make a case for investment readiness in their own way that would allow, you know, the flow of capital and, you know, the necessary resources. I don't know that, I don't want to take up much of your time. I want to keep it short and simple. You're muted.
Oh, sorry. Thank you very much. That was a beautiful start to the discussion. Grace, I'll come to you. You've worked with women for a number of years. And my question will be, what insights have emerged from working directly with women founders? How have they been able to navigate challenges in creative manners? How have they been able to, how have they been able, as micro-entrepreneurs, how have they been able to address this investment readiness in their own way? And why are they often overlooked by financiers? Or what do you think make financiers overlook them?
Thank you, Sharon. It's a pleasure to be here. Hello, everyone. And thank you, Ifowa, for that beautiful start of the conversation. If I may, in my, I don't know if it's long or short time working with women entrepreneurs, and as we co-created Growth for Her actually came from the experiences of 3+ partners working with women in different regions. I had more experience working with women in Francophone Africa. Sharon came with experience working with women in Nigeria, but the story was almost similar everywhere you go. But the difference was in the systems and the culture that governed those societies that impeded women's ability to access funding. I think that the main difference that we see in terms of what works for the investors, bankers, financiers, and what works for the women is a difference in understanding of what business is and what success looks like for these two groups of people. I like what the previous speaker, Mr. Efusa, said about the fact that today talk about investment readiness for men. That's like the beginning of the story. It's my mantra to say that women businesses and women entrepreneurs, we are overtrained and underfunded. There are 1,000,001 programs training women entrepreneurs and not giving them money. I am so upset because right now in Nigeria, you have even banks training women and not giving these women money for reasons I will never understand. But let's go into some of the reasons that we've seen. First thing is that women have women entrepreneurs tend to have multiple businesses. And to a lot of us, I'm going to speak first from the bank's perspective, and then I'm going to speak later to the woman entrepreneur's perspective. So say I am the bank here, and the bank, the way we have understood their lens of looking at women entrepreneurs is, if you have 2, 3, 4 businesses, then you are not serious about your business, because what am I funding? And a lot of times you see this woman, oh, she does cake. She has a cake shop. She's also doing training. She's also, on the side trying to do like an events company. She's on the side. So because she does cake and she caters to birthdays and weddings, now she's starting an events company, and now she's also doing tailoring, and then so there's too much going on there. So what am I looking at and what am I funding? You're still small, you're not yet big. So this is not even a subsidiary expansion strategy. There's no structure around your business. I don't understand what I'm looking at as the banker. That's what I'm thinking. And you even go on now to make it worse in the sense that your entire operating system is WhatsApp and Instagram DMs. And how is a bank supposed to look at that? Like, there's no correlation. There's a data gap. Your data is on your phone and it's in your DMs. There's no cash book. There's no register. There's no way you are feeding all of those things into a comprehensive document that a funder can look at. Oh, I have nice reviews. And what should I do about the reviews? Like, what is that supposed to do for me? So the banker is not necessarily, because WhatsApp is not an operating system. I know that social media is here to stay, and social media has changed our lives, and social media has generated a lot of revenue for women businesses, but a bank is not going to trust that information, right? And therefore, there's that disconnect of, okay, this is really nice, and you have a WhatsApp group that you sell to that has 5,000 people, but how many of these 5,000 people are buying? Do you know? And you want to create a community. There's too much disconnect in terms of what the bankers want to see and what the women businesses are actually doing. And I understand why we do it. And now I'm going to flip my hat and become a woman business and advocate for my women, because then we're looking at the fact that I am a woman business, and most often I have created this business out of passion, out of the need to take care of my family, out of I do not want to be redundant and I want to do something with myself. A lot of women businesses, we saw this in Growth for Her when we wanted to do testimonials. A lot of the businesses, I think almost 70%, a lot of them will tell you, oh, I fell sick and I found out cookwares were causing me to be sick. So I decided to create a business to do something about it. Or I wanted to lose weight and there were no healthy options. So I decided to start a food business. Or I wanted to make clothes. I couldn't find clothes for plus size women. So I decided to start a business for plus size, a clothing line for plus size women. It was never just about, I want to make money. So the motivations are always really different. And I think that the banks sometimes fail to see that human factor in the business. Because I started something out of love, I would die to make that thing work. And that's the risk that I have taken that banks do not consider. I want to even look at the fact that women businesses have multiple streams is because we understand the market in a way that people who are just out for the money do not understand it. We build businesses based on social capital. We build businesses based on trust. So because, for example, I'm a tailor in the neighborhood and I have skills and I'm patching everybody's clothes, 2, 3, before you know, Sharon has told her sister, oh, Grace makes really nice clothes. She could do clothes for your traditional wedding. That's how I have built my business. And because I have been able to grow like that, I have multiple skills. Women are very multi-potentialite. And what are they supposed to do with all of those things? I know they keep advising us that not all your talent is business, but come on, I have to feed my family. And there are different seasons that women go through. For example, if you do cakes, we're now in December, it's your time to shine and collect that money. But in January, February, nobody's knocking on your door. If you seamstress when you back to school and you have to make uniforms. Like, so we understand these changes in seasons, and we understand the importance of cash flow, especially when it comes to putting food on the table and taking care of our families, and even just ensuring sustainability. So why is the bank not looking at this, even though it is small? It's a subsidiary system, which is where there is a role for accelerator programs and entrepreneurship support organizations like Sharon and I to come in and look at the woman's business and see all the multiple streams and identify what is fundable and help them structure it. If I were a bank, that's what I'll be looking for. What is the best way to structure this? But then again, I understand they have to answer to shareholders. I'm going to stop here for a bit because you know that we could keep going. But yeah, thank you.
Yeah, thank you, Grace. I will come up with subsequent questions to address some of this, what is actually missing in the mainstream investment conversation, especially when it comes to funders or financiers, not just the banks, but we have other funders. So let me hear from Christine from the Andy's perspective. And so based on Andy's research, I believe that a number of researches have been conducted by the Institute. And based on that research and member activities, I will ask the same question. Has the narrative around women investments begun to change? If not, why hasn't? Why hasn't it? Yeah. Christine, over to you.
Thank you so much, Sharon, and thank you, A4 and Grace, for the energy. I saw the comment session, too much energy. I'm loving this panel session. So I would say that the perspective and narrative around women investment readiness is gradually evolving. I mean, my question is not yes or no, but I want you to understand that is gradually evolving. For many years, the dominant narrative around women was that women needed fixing in order to attract investment. But I would say there's been a shift based on evidence. For instance, the 2024 Project Catalyst report by 2X Global, by Sagana and Visa Foundation reveals that investors are now integrating broader gender lens criteria into decision making. Contrary to the solely traditional financial metrics and other business plan and pitch quality they used to look at. Now they are incorporating non-traditional metrics, like we have the leadership representation, we have the workplace practices, that supports women, and we have metrics and criteria relating to whether enterprises are serving or empower women. Now, when you look at this, you'd see that these factors are increasingly seen as indicators for business quality and long-term value, not just, the regular social add-ons. We used to look at those criteria in the past. At the same time, when you look at fund managers and what's going on, you'd see that they are beginning to adopt more flexible approaches like the blended and the evergreen fund structures, that are available. And you'd see that this indicates a recognition that financial traditional metrics alone often fails to capture the resilience. You mentioned something about resilience at the beginning, Sodia, and the innovation and of course long-term performance potential of these businesses. And when you also look at Andy's own research, you'd see that it supports this evolving narrative. For instance, Strengthening Gender and Climate Lens Investing in Sub-Saharan Africa report documents how Andy trained investment managers across Sub-Saharan Africa via our investment managers training and incorporated gender lens into it. So what it meant was that they were able to train investment professionals on how to build their capacity in gender lens investing. And also Andy, via Andy's Gender Equality Initiative, we also launched the Pay for Result Fund in 2022 that rewarded investors for meeting gender impact targets. So now you're seeing that ecosystem supports organizations are now beginning to recognize that non-traditional metrics are very, very important in helping these women to access capital. Now, I would also mention the 2024 Empowered or Undermined Women and Entrepreneurs and Digital Economy Report by Cherry Blair. I mean, this was also published on Andy's website. You'd see that it provides evidence that women entrepreneurs are already demonstrating strong adaptive and digital capabilities. Now, it's looked at about 96 low and middle income countries, and we saw that women are rapidly adopting digital payments, AI-enabled tools, in order to expand market access and in order to support their businesses to manage finance as well as build customer relationship. And I mean, what am I trying to say? It's clear that this growing digital sophistication reinforces the fact that women are not unprepared, or they are not lacking capacity. Instead, they are innovating and they're adapting even faster than we all are acknowledging. And the report on digital economy by Cherry Blair also highlighted some barriers that women entrepreneurs face, like limited networks and uneven capital access. So it's more like, reveals the fact that the issue is less about women's readiness, but it's more about whether systems and investors are ready to begin to recognize, the strengths that these women portrays. Thank you.
Thank you, Christine. That's very insightful. Just before I ask let me ask a follow-on. You mentioned something around blended and evergreen structure. So I believe this is an opportunity that women in business can assess or can take advantage of. So can you throw more light on what that structure is?
Thank you so much, Sharon. So, unlike the kind of funding where you just have, one model, the blended kinds of bring together catalytic and private organizations to come together to, invest, to ensure that the investment model is long-term and flexible. So I like to call it the patient capital, because it gives women the opportunity to explore different and diverse, growth strategies, while trying to scale their businesses. So, I mean, when you go online, you see so many examples of such initiatives that are available. Thank you.
All right, thank you very much. So I'll come back to you, Grace. When you were speaking, you were a bit passionate about what the gap that the bankers or financial institutions fail to appreciate about women in business. So from your what have you learned so far that is the missing link, especially on how women are able to navigate themselves around these challenges, and why are these innovative and creative methods that women adapt, why are they still missing from, or why do you think they are still missing from mainstream investment conversations to a large extent?
Thank you. So I want to thank Christine for sharing some of those insights that she did, because we have identified that the narrative is changing. I remember when we started the Growth for Her program and we had a meeting with the bank, and one of the key things that they told us was, in terms of building this narrative, because a lot of times, as much as even we want to say that banks and investment institutions make decisions based on facts and figures, there's also a huge role that mindset plays. So they were like, in your publications and in your promotion of your programs, do not use the traditional pictures that people always use for women businesses. The pictures of the woman that has spread a mat and is selling kola nuts by the road or roasting corn by the road. Those businesses exist, but
yes,
the 42 billion gap that we mentioned, those women are a very small percentage of those that need funding, right? And a large percentage of that opportunity lies in the medium and in the small, medium, and growing enterprises, if I may say. In terms of the gaps that we have seen, at this point, because there has been a lot of research, and this research sometimes is done by banks in their bid to tick off their CSR. Oh my God, I shouldn't say things like that. Sorry. But yeah, in a bid to satisfy CSR quotas for the year, they actually do the research sometimes and actually show you that, oh, women are not necessarily risk adverse. But the gaps that we have seen is sometimes there is a lack of how should I say it? There's a lack of steady growth. There's a lot of fluctuations in women-owned businesses. And like I explained earlier, it's because of the nature and the sector in which a lot of women find themselves and where they do business, right? So like I mentioned, the fashion business, the catering business, the events business, and what have you. We had a very particular case in Growth for Her. There was a woman who had made about almost equivalent of $200,000 in 1 year. And then in the next 3 years of her business, there was almost like a steady decline, increase, decline, increase, and all of that. So that in itself was very problematic for the bank in trying to understand, okay, but why are we seeing these fluctuations and it's too much, therefore we cannot give you money and we do not understand. In another example that we saw at Growth for Her was not necessarily the decline in revenue, but just what happened to the Nigerian economy in the last couple of years, where the interest rates became, I don't know what it is now. I'm afraid to open bank a newsletter anymore. Please, what's the interest rate? Is it 30%? Is it 27%? Where are we? So we had a lot of women that were even saying, okay, we want to take the loans. We want to take the financing opportunities. We want to invest in our business. But when we spoke to the banks, the interest rates were too much for these women based on the level of growth that they were and based on the seasonality of their businesses. So if I take this loan at 17%, at 28%, I wish it was 17%, at 28%, what am I going to show for if I have a 24-month timeline? I remember there was this woman who called me randomly and said they wanted to charge her, was it 3% a month or something? It was just ridiculous. And that was because, again, the economy, general economic situation, Nigeria was trying to fight the inflation crisis and all of that. So interest rate had to go up from an economic perspective. It made sense. So therefore, the option for a lot of these women businesses became blended finance or became alternatives that were not banks. And when we went into finding out, okay, so what are these alternatives? Where are the venture capitalists that are taking a risk on women? Where are the angel investors? And where are the blended systems and all of that? A lot of them were not looking at the sectors that these women were in. Let's be honest, almost 75% of venture capitals are gonna fund tech. If you are not tech, you are not receiving money because you're not hot and flashy and you don't have an app. And most of these women were just trying to get them into the digital space. Christine mentioned that a lot of them are starting to use digital tools in their businesses. They are becoming digitally savvy and tech savvy, but that does not mean that they are going to build an app overnight and become a tech founder. So what am I going to do with those women? And we now had to start making a case for the fact that we need to diversify the pool of alternative financing that exists for traditional businesses. Outside banks, I do not see a large pool of funding available for women that are not in tech and are not in specific driven fields, right? So we have seen what happens when you take a risk. Venture capitalists have taken a risk on tech, people that had, because again, let's be honest about this whole systems and you must have financial records and all of that. A lot of the investment that goes into tech, some of these tech companies are not up to 5 years. Some of these companies do not have the financial or whatever record history, but they are betting on a product that is innovative and all of that, which means that there is opportunity for people to invest in businesses that do not necessarily have all the checks and balances that we are looking for in traditional systems. But then there is no availability of those funds, or let me say there's very limited availability of those funds. So those are the gaps. If you ask me, and which is why Sharon, you and I and Victor, we've had this conversation about how do we push for more funds, and how do we even think around the thesis and the theory of how to create funds that are not necessarily traditional, but that invest in women businesses outside of the traditional space. Thank you.
All right, thank you, Grace, so much. Alpha, I will come to you. So you are more or less in the quote unquote private sector, and as part of the job you do, you provide some of these community relations and improvement of the wealth of the communities in which you work in, and you've had to deal with women, empowering women in the communities. So I will ask the same question. They have been able to develop innovative ways of navigating all of the unpredictability that comes with business or running a business as a woman. Why are these insights? Why are these innovative steps? Why are all of this still missing from the mainstream investment conversations?
Thank you very much, Sharon, and lovely insights from Grace and Christine. You know, I have a feeling that Grace doesn't really like banks very much. And before, as an ex-banker, I was a bit worried. I started sweating right here, and as cool as the room is. But, you know, to the point, if you notice when I spoke earlier on, I was very cautious when I used banks, or I'd rather say the owners of these resources. So, because I like to describe the fact that our economy, and I think across Africa, has really evolved. I know the report in question was released around the $42 billion AFDB report that led to the affirmative action. I think the report was released around 2023, if I'm correct. And I want to assume that the report was a culmination of research.
Yeah, 2003, yeah.
Yeah, and activities that spanned over a significant period of time before the report was released in 2023. So one could imagine that, you know, this report is coming a long way, probably from conception or inception till date, been over a decade. You know, a lot of things have changed and are changing with regards to mainstream investment conversations. You just asked, why hasn't it been reflected, or why is it not reflected in mainstream conversations? So the thing is anybody really checking? Is anybody really taking note of statistics? Because largely, most of these businesses or enterprises or entrepreneurs led by women, to borrow Grace's words, small, medium, and small scale, right? Which is what I think the report would have focused on. So my concern is we may not be accurately reporting the data or capturing it, or recognizing, oh, where are we with regards to this journey? How can we support the conversation to improve? So, but let's assume for a second that, yes, indeed, these conversations are not being recognized in mainstream conversations. And that speaks to the problem. This, I would like to call it banker bias that, you know, Oluche spoke about. You know, it just hit me because it seems like there's some sort of banker's bias towards mainstream conversations that center around what we're used to. So one of the things I think we'll be able to come to terms with at the end of this conversation and going forward is the fact that there has to be an intentional and deliberate focus on data, on outcomes as far as informal and on non-traditional conversations for funding for businesses led by women. You know, there's a word you mentioned at the earlier point in your conversation, I'm sure we'll get there, which is the resilience, you know, and how all of this plays into it. So I think we were going to, if a pattern is going to emerge, and we all see that where the report says we have been, where are we now? Has anything changed? You know, with all the work that you have put in, with all the effort that Grace has put in and Christine has put in, and we are putting in as the private sector, we need to be quite certain, okay, where do we need to tweak? What do we need to focus on to improve this infusion into mainstream conversations about mainstream funding conversations, like you asked? So yes, I can tell you that what is wrong It is what has really happened to the system. A lot of I always like to situate my conversations around our operating environment. A lot of things are not working in our system. Can you guys still hear me?
Yes.
Am I still with you? Okay, I think my bandwidth was a bit
Yes,
free today.
yes.
I was just talking about the broken systems and challenging systems. And the next thing I know, my network is flipping and telling me my network is unstable. So yes, I was just trying to explain that. So our environment is largely, sadly, broken. It is. So and we must speak realistically. The women, whether it's women-led businesses or women-led entrepreneurs, bear the brunt of it. Let's look at Nigeria demographically, north and south. Let's bring down this conversation to practical, realistic, everyday terms. How many women in rural communities that I deal with, how many women who are traders can comfortably and securely go about their business without the fear of a lot of things? So all of that militating factors are real. And when it accumulates and you have the bankers and the financial owners and resource owners and shareholders making these decisions, everybody likes to focus on what is minimally risky. Who wants to put money in a system that doesn't guarantee security, that doesn't guarantee risk management, it doesn't have protection? So I think we need to think beyond. If we want to bridge the gap for the 42 billion.
Uh-oh.
What
Oh, I think we lost you.
Maybe he should put off his video.
Okay. Ifa, are you still there? If you are there, so let me know. If you are there, then maybe turn off your video. Okay. Okay. Hello.
Yeah.
Okay.
Sorry about that. I was just this is are the issues. Let's put it anyway. But in rounding up, I want to say that so your question as to why are these things not being captured in the mainstream conversations, it is because everybody is most of the fund owners or the bankers have developed what we call the banker bias, what I like to call the banker bias, and low risk appetite, and of course a lot of other factors that would influence their decisions. But the thing is, and it is also on their part because we have failed to develop systems or in systems that take into cognizance the very things that make women-led businesses strong and thrive. We are struggling as as bankers to develop solutions and products that are adaptive and flexible to still achieve what needs to be achieved. So yes, perhaps a bit of hesitation or fright. So there's a combination of issues as to why. Just to answer your question, it starts with, of course, the fact that they need to guarantee deposits. They need to guarantee return on investments to shareholders. But at the same time, even the women business owners themselves require some level of operational environment stability. You want to be able to be sure that women doing businesses can transport, the logistics of transport. Let's even pick market women. I mean, Grace had mentioned women selling akara. I guarantee you that what do you call the market women or the traders? Well, nobody even knows the quantum of value they have in our economy. I don't know if there's a research, maybe I'm wrong, but the fact is that let's even start there. These community-based women in markets, there is no market in Nigeria that doesn't have 90% population of women who are trading and selling. What is the value of all that? So I thank God for these new innovations with financial tech businesses that have made some sort of credit and capital available. So maybe future research will show a gradual improvement, and the conversations are no longer about mainstream investment decisions. Maybe we'll now have midstreams and downstream conversations ongoing for funding. And it's no longer about the banks, it's now about other sources, other alternatives. So I think I heard a phrase called blended credit or something like that.
Yeah, blended structure, yes. Blended financing,
structure.
blended
So
structure.
maybe we're moving very, very quickly towards that side of things where, you know, it becomes more flexible and there is opportunity to access capital, and there's a recognition of the uniqueness of women-led businesses. You know, there's a recognition and there is provision for products that will suit their uniqueness. Thank you.
All right, thank you very much for that detailed feedback, Ifua. So we've been able to identify some of the missing links, from bankers buyers or funders buyers to data, who is checking what the progress has been or what exactly it is, to not bringing up the discussion in circles or in ecosystems that are important in supporting women. In supporting women business owners. But there is one aspect. So we are moving slightly from this initial setting up the stage to breaking down these missing links. We have talked about financial institutions, venture capitalists, the bankers, buyers, and all of those things. But the systemic barriers, apart from the financial aspect now, where you have legal frameworks that do not generally support this, because we cannot all work in silos of these different ecosystem organizations and people involved. We cannot all work in silos. So what are the, we want to go further to break down what these systems are, what the legal frameworks are guiding women in businesses, what are the policies in place for small scale and medium entrepreneurs who are women, and all of these things. So Grace, I'll come to you. We have identified that women have come up with innovative ways of addressing challenges. They've been proven to be risk managers, especially from your experience also. So why is the dominant system, or why is policy, or why do governments of these African nations still, why is this system still structured to treat female business owners as either high risk or not ready? Why do you think that is an issue?
Thank you, Sharon. Before you even asked me the question, I was about to put my hand and say, "Hi, madam, I want to take the question." Yes, and firstly, I want to apologize to Mr. Ifosa. I didn't mean to make you nervous. I'm sorry. And I also want to apologize to the banks. There are good banks out there. Growth for Her, we established partnerships with a few banks. And I'm not going to call names, but a few banks actually gave loans to some of our women, and we love them for that, and we appreciate them for that. We just want a lot more. We're greedy like that. We want a lot more, because I don't necessarily even think that is greed. There's just a huge gap. And to come to your question, Sharon, I'm going to talk from my primary experience as a Cameroonian that has lived in Cameroon for most of her life. In Cameroon, actually, as a young person and as a woman, you're very disadvantaged. I think I remember when my friend, who at the time was about 26, she bought land. She worked at the bank, so she bought a piece of land. And she went to register this land so that she would have all the adequate papers, and she couldn't. In Cameroon, actually, I think if you are under the age of 40, it is almost incredibly difficult for you to register that you own a piece of land. So a lot of people end up registering the land in their parents' names, in older people's names. As a woman, sometimes I don't even quite understand what the section of law is, but it is impossible, whether by human factor or by legal factor or by legislature. It's just impossible. So how then is a 35-year-old, 25-year-old woman with a brilliant business supposed to access funding from a bank, even when the bank finds them creditworthy if they don't have collateral? There was a study that came out in Nigeria a few years ago where they were showing the percentage of women that own land and landed assets across Nigeria. And we saw the numbers and it was astounding. I think in some parts of Nigeria, there were only 2% of women that owned land, and how, like, let's even say that my business, I have everything to a T. I'm credit worthy. I have the cash flows. I have the projections. My business is doing good. And I do not want tokenistic financing, which means I don't want you to give me a $2 million grant, a 2 million naira, sorry, grant, and say go. But I'm looking for probably 200 million naira, or I'm looking for $1 million to advance my money, but then to advance my business. But then there's no collateral because I'm not even allowed. The systems that exist do not allow you to own a land. And I promise you that in Cameroon, we have struggled. Again, Cameroon is a very unique case, but it's not just Cameroon, but a lot of Francophone Africa. I worked in the DRC and we saw similar cases like that where women are not allowed to own property either by law or just by culture and system. So how are those women supposed to access finance? We live in a society that in cultures and societies that are incredibly biased, where women's work in general is not being accounted for. We know, forget the $42 billion opportunity that we've seen that could be invested. We know for a fact that if we invest, if we close this 42 billion, we are going to, I think it's triple Africa's GDP, because we would unlock, is it 250 billion, or it's almost a trillion US dollars that we're going to unlock by investing in women and having them grow businesses. Let's move away from that amount of money. Let's even go and talk about the fact that the unpaid labor and care of women is 3 trillion US dollar economy globally. And this, when you live in a society where there is no value placed on your work, you live in a society where you cannot own property, you live in a society that makes it incredibly difficult, in some cases, for you to even own a bank account, which is why, for example, in a lot of countries, let's take Cameroon. I'm Cameroonian, I'm a very educated woman. I've traveled, I'm well-read, but in Cameroon, I don't use the bank. I'm just being honest. I don't use banks in Cameroon. That's just because the banking system, first of all, is incredibly locked. So what we do is informal. We have mobile money, which is why I was very shocked when I moved to Nigeria in 2021 and I saw that MTN was just launching mobile money. And I'm like, what do you mean? We've been using mobile money in Cameroon as our bank, maybe since what, 2007, 2010, thereabouts. So all my money is in mobile money, because it's the easiest way for you to move left or right, but the bank is not going to acknowledge that. Those are the systems that we live in Francophone Africa, where access to banks are even just incredibly difficult because the system is built to favor banking for very big businessmen, and I don't even know how to explain it. So there's cultural problems, there's systemic problems, that is both legislation and mindset and culture. So there's a lot of work that has to do to open up certain societies. And saying this from, again, being Francophone African, Cameroonian, and living in Nigeria, Nigeria's economy is so open in ways that we cannot understand. When you come from a place like where I've come from and where I have my experience, and then you live in Nigeria and you're like, what are you people even complaining about? But then you live in Nigeria and you understand what people are complaining about, because those things still exist there, but they are just nuanced in different ways. Thank you.
Thank you, Grace, for providing us with that context. So we talked about resilience capital, because a lot of these things that you have mentioned are some of the challenges and the constraints that the policy or legal system or laws within some of these African countries have provided with. And you mentioned something around mobile money, you not having to use the bank and all of that. And the average businesswoman in Cameroon will also not want to use the bank because first and foremost, she doesn't even have the legibility to be able to obtain collateral and all of that. And as Ifua mentioned earlier, we had talked about what we call resilience, what we have termed resilience capital here, which we say is a mix of adaptive leadership, risk intelligence, and supportive networks, because that's very important when you have a network of women or a network of funders or a network of, so different form of networks that will help. I want to ask Ifua this question. How can this resilience capital serve as a bridge between investment readiness and long-term sustainability, especially in markets that are so unpredictable given the economic situations we face in Africa? Grace, I also want you to think through that, because I would want you to just chip in briefly on that. Christine, too, I would like to have your perspective, because sometimes research and the data that is a part of a missing link, these are some of the insights we'll need to require to be able to put all of these thoughts together and come up with something that is well structured, or what we can share amongst the investment communities and funders for these businesses to draw their attention and say, oh, this is something we can tailor, this is something we can tweak, this is something we can adjust and make it more adaptable instead of using what is expected or what is traditional. Over to you, Ifua. Thank you. Yeah.
Thank you very much, Sharon. You know, when I first came across your phrase, resilience capital, it's something you guys coined, or is it something like a thing already, or a concept that exists before now?
More or less from our experience,
okay.
Yes.
From experience.
No, more or less from our experience, yes.
It was quite unique, you know, because, you know, it takes into consideration the fact that, you know, flexible, you know, options for, you know, payments, and for flexible options for access to capital. It takes that into consideration. But I think what is more important about your the resilience capital thing is the fact that it values the adaptive capabilities of these women-led businesses, and you know, emphasizes the uniqueness. You know, I earlier mentioned about the uniqueness and about, you know, women-led businesses, and the impracticality of it is in itself a strength. So what it means, therefore, is that, you know, tailored capital plus systems that support and recognize these adaptive, you know, characteristics would mean that resilience capital is the way to go. So how do we make it a bridge? I mean, for me, it's simple. At the end of the day, what are the various components? Your research has shown that you've been able to mentor women, you've been able to provide some sort of access to leadership, you know. So at the end of the day, the fund managers must first of all be willing to take that that risk. We need to be able to say that resilience capital is the key to unlocking a very, very large market. 2 billion that you have referenced is something that is available. But yes, and the market volatility, you talk about the shocks, right? You mentioned something about shocks, market volatility, yes. So the thing is here, what else will be better for something? So let me use an engineering concept. When you look at buildings in areas that are on fault lines where you have earthquakes, one practical feature is these buildings are flexible. Do you know why? These buildings are not rigid buildings like you would find in Nigeria. So in parts of the world where they are prone to earthquakes, prone to all of these tremors, they construct in such a way that these buildings can slightly sway along with the tremors. So the idea is that the market is already, we're in a very volatile situation. So the flexible capital that your resilience capital represents is, for me, the best solution. We can't afford to have any rigid systems that would require you to checklist to a detail, like, you know, what Grace experience is with banking. So the best way will be to actually emphasize that let us have products, let us have credit facilities, let us have incentives around the women-led businesses that accepts the uniqueness of their own situation. Collateral, I mean, gender-sensitive collateral, I don't know if that's a thing, but it looks to me that, okay, if land is not an option, and quite correctly, how many women own their own land? How many women own the kind of collateral that will be required? So how about building products that recognize that downplays the importance or the necessity of landed collateral and creates or rather emphasizes that flexibility? And then let us focus on things that value resilience, cash flow stability, diversification. The very thing that we are afraid of women-led business is the strength of it. Is it multiple revenue streams, multiple businesses, hair salon or whatever. For some of us who have sisters and spouses, the fact is, if you are close to a woman that is entrepreneurial, she would not necessarily be stuck to one thing. She could do a lot of things. A lot of the women in the marketplaces, a lot of women that own restaurants, grow from one business to the other. Look at restaurants. Most of them started off as probably food sellers. Most of them also now grew from just restaurants into catering businesses for events. And while they're at it, the next thing you know, they're also planning events. And the next thing you know, they're also decorating venues. And the next thing you know, they're also providing ushers. They're providing, so the thing is, it has grown from what? She was just a food seller to a restaurant owner. She still has that restaurant service, still has that business. But the thing is, all of this flexibility guarantees multiple streams of income. This diversification is the strength, you know, knowing that she has a myriad of customers, depending on what aspect of her business is in focus. Then I think that's one way we can value, if we introduce tools that recognize all of these things, is also a way to build that bridge. I've talked about a reference, the fact that adopting the classical capital that responds to the shocks, recognizing it as a strength, recognizing tools that value this resilience, all of this cash flow. These various businesses therefore means that on a daily basis, cash flow is guaranteed. So rather than have a product that says we must pay, how about financial resources, resource owners or banks or the equity fund holders, whatever, recognize that the daily cash flow potential of these business owners is something that they can build their credit around. And then finally, I think in trying to build that bridge, the support goes beyond just money. You know, there's a lot of energy requirements. There's a lot of payments options, logistics. You get that businesses, women-led businesses require to ensure, you know, access to capital. And your resilience capital, you know, I think it recognizes this bit of it. So, you know, at the end of the day, having been able to access raw materials, move a business and our products from one point to the other, and also secure some kind of off-taker agreements, build our customer base, all of this support are not just financial, you know, and sometimes not necessarily be training required, but just be actual, you know, involvement in the business, you know, in the enterprise. So I hope, you know, I would want to believe that if we are able to have bigger conversations, policy statements, and the role of government is very critical. You can't build systems. You're not going to fix systems if, you know, you don't involve legislation. You don't involve local politics. You don't involve. So I think we have our work cut out for us. I think Sociocapital, you guys, beyond these fantastic, beautiful phrases, you have your work cut out, and there might be a lot more that needs to be done with regards to legislation and creating this awareness. And don't forget the fact that security is paramount. Nothing is going to work. We're not going to fix anything in Nigeria or Cameroon, you know, or anywhere else in Africa if security, governance, and the real things that are happening on a daily. We wake up on a daily, you're hearing this, you're hearing that, and elections are stolen, or people are killed, and students are kidnapped. All of those things, we have to address them. We have to confront these demons. Otherwise, all of these conversations will just become a jamboree. Thank you.
All right, thank you so much, Ifwa. There's something you mentioned that I feel like we'll come back to just after we have this have Christine and Grace comment about, and when you talked about building tools, talking about something around gender sensitive collateral. These as resilient, one of the fundamental things of resilient capital is building supportive networks. So we'll come back to you to throw more light on this area. So Christine, let me hear from you before I hear from Grace on bridging the gap between readiness and sustainability for women in business. Is it me? I can't seem to hear Christine. Christine, am I the only one? Can anybody hear me?
Yes, we can hear you.
I can hear you loud and clear.
Oh, okay. Okay, Grace, let's go to you. It seems Christine has a problem with her network.
Thank you. I was laughing just there because these digital platforms can put you, they can gaslight you because it's like, is it me? Is it not me? But yes, in terms of bridging the gap between readiness and sustainability, I think that the first thing we have to maybe be aware of is that readiness is readiness is a journey and it's not a gate. A lot of times, and this goes both ways for both resource holders. Let me borrow FOS's words. The resource holders and the women entrepreneurs and the entrepreneurs. Readiness is a journey, it's not a gate. It's not like, okay, let's say you went through growth for her for 3 months and then bam, you're supposed to get 100 million, because no, sometimes the knowledge that you have gathered, the support that you have gathered, the mentorship that you have gathered, it's going to take you like a year to fix a lot of things in your business before you're able to access finance, right? It's also for the banks as well. It also means that there has to be some kind of change in the systems and the processes. I like what Efosa mentioned about tools and capabilities in the system that should adapt to look at what is the situation on ground, right? Because, for example, rather than somebody putting an application in front of you and you review it in 2 weeks and say no, what are the different stop gaps and what does the journey map look like for certain businesses in certain sectors that we can take in order to arrive at a decision? And again, this is not us asking for favoritism, because I know that a lot of times when we ask for and seek for systems to be redesigned, it's almost like, oh, you want to be favored, you're whatever that whole whining thing is. I don't want to hear it. That's not what we're asking for. We're saying that the reality on the ground shows that circumstances are different for certain types of businesses. Traditional women businesses exist in different circumstances, and our culture and our systems have permitted and allowed for these things to be this way. So therefore, how do we redesign and how do we co-create tools and systems and processes that will support the investment and growth of these women? What readiness and sustainability also looks like in terms of access to finance, like Efosa said, is sometimes non-financial support, but support to like access to market, which is something that we did, Sharon, during Growth for Her, where we brought the ShopRites, the SPAs, and the different supermarkets to say, okay, speak to the women about the process of getting their products onto your shelves, because that means that they now have a wider reach rather than just shouting on Instagram or rather than just being small communal businesses, but now their products are able to reach your 10, 12 outlets across Nigeria and across Cameroon and all of that. And it was so interesting to see that we even had there was one of the women businesses. She makes biscuits from Cameroon. She traveled all the way to Lagos for some of these meetings to see how she can start getting her product all the way from Cameroon to Nigeria. So in her case, it's not necessarily money, but just opening her up to a new market is what can build that sustainability for her. We also look at in terms of the resilience, when I think of resilient capital for women business, I'm thinking about the fact that can this capital and can this funding help the woman absorb the shocks that are in the economy and help them rebuild? Because a lot of times, most of the things that Efosa mentioned in terms of systemic factors that are outside of the business space, like insecurity, like elections, if you run a traditional business, you're going to be affected first, right? You're going to be affected first. If there's insecurity in your neighborhood where they're rounding people up, you're going to be affected because you can't open your shop the next day. You can't go to your factory. So how can the capital account for some of these things? And these are things that we have to fix, but it's not a conversation for this webinar. So it also looks like community. And I know that you're going to ask the question later, but I just wanted to speak to it in terms of post-accelerator programs and post support programs that are 3 months, 6 months, and then it's ended. And then what next? The what next is that journey and post-mentorship and just even understanding how can we rethink what financing looks like for women? Should we be doing group financing? And I know that this has been tested in a couple of places. What are the different things that we can do to ensure that these women are not just receiving capital, but they are sustainable? Because there's bad capital. We've seen cases where women have taken money and it's instead ruined their business instead of building it. So we have to be very conscious of that. Thank you. You're muted, Sharon.
Thank you very much, Grace. Christine, can you speak now?
Sorry, my network has been very bad. It's raining here. Can you, what's the question?
Okay. Oh, okay. So we're talking about bridging the gap. How can resilience capital bridge the gap between readiness and sustainability? And we talked about resilience capital being a mix of adaptive leadership, supportive business networks, and risk intelligence that all help women to handle the uncertainty in the entrepreneurship world.
Okay, I mean, thank you very much. So to understand how to bridge that gap, I think we first need to understand what the root problems are. For instance, when you look at the entrepreneurial ecosystem, you'd see that just like Grace mentioned, when bank offers capacity development training without even making any plans for funding these businesses, what you see is that investors, ESOs, and funders, they often operates with incomplete information. So imagine when women-led businesses finish a program and then they are still invisible to potential capital providers. So the point is that the gaps exist because there needs to be like a platform where these women-led businesses are mapped. When they are mapped, investors can now say, okay, these are high performing businesses. These are businesses that, have a lot of ticked, criteria like the adaptability, resilience, leadership. They have strong connection to networks and so on. But first of all, when you ask the question, what is network? Network is when these women entrepreneurs are connected with peers. They're connected with funders. They're connected with investors. They're connected with DFIs, that's development finance institutions. And how can that happen? Can there be like a digital platform where you have these businesses, you have them, establishing this relationship where they are learning from peers, learning about the challenges they are facing, learning about how they were able to tackle, issues, that they encountered in raising funds. And I think, if I heard correctly, my network has been terrible, but Afua mentioned something about diversifying revenue streams. Imagine when these women entrepreneurs don't just rely on one revenue stream. They're able to say, okay, I can make money from here, and there. They're even able to bootstrap. Imagine when we have an entrepreneurial ecosystem where businesses don't rely on funding, one of the things we look at Andy is localization. And what we look at is how can we strengthen the entrepreneurial ecosystem to be locally owned and locally sustained. So imagine if, you know, these women entrepreneurs have diverse revenue streams and they're able to even fund their business. Their business is already able to stand strong, you know, before they even begin to apply for, you know, different funds and, you know, try to implement or try to utilize, you know, things like blended finance and so on, then you see that, you know, things will be able to work well for them and they will be able to scale effectively. Then I was talking about understanding the root causes first to know how we can bridge this gap. There's also a misaligned incentive between ESOs and investors. So imagine a situation where accelerators and ESOs have different they have different goals that they are trying to achieve as a result of their program. For instance, some ESOs want to achieve goals like program completion and skill acquisition, while investors, on the other hand, are looking at things like what's the quality of your pipeline, what's the business traction. So there's a misalignment. And for that gap to be bridged, what you see is that they need to create an alignment. How can ESOs or capacity development providers or BDS, business development service organizations, anyhow you want to phrase them, how can they work together with investors or fund managers to maybe have like a shared metric? Can ESO track outcomes that investors value? Can they even come together to create like a joint program design or design the program together, you know, so that program can co-design accelerator curricula that build both business skills and investor relevant traction indicators? Then I already mentioned the digital sharing platforms, that's also important. And then I know I talked about flexible funding models at the start, but how can we begin to amplify, you know, these new information about resilient capital? How can we as ecosystem players like Andy, an ecosystem enabler, ESOs, funders, how can we come together to, you know, begin to advocate for flexible capital instruments? Let's understand that these women-led businesses need flexible models. They are experiencing so many issues, societal, sociocultural norms that, you know, preventing them from achieving what they want to achieve. How can we begin to amplify these new approaches so that, you know, everybody can be aware and everybody can come together to make it easier for that gap to be bridged? So, I mean, let me not bore you, but
thank you very much, Christine. No, thank you very much, Christine. I think you had even addressed one of the questions I would have asked before. We are 20 minutes to the top of the hour, and we may have to cut this short. It's a very interesting conversation, and it's long, but we don't want to stay more than is required. So we'll just, some of the questions we may just have to skip them. But since we are now talking about the ecosystem, as Christine had mentioned, Grace, what's the role, or what role can creative hubs, co-working communities, because these are all parts of resilience capital when we talk of supportive. So what role can creative hubs, co-working communities, and localized innovation clusters play in strengthening market access, as well as strengthening this resilience capital we are talking about? I know you had touched on this, but probably you could just elaborate in a few minutes.
Thank you. And I want to thank Christine for her brilliant intervention. I've been taking notes when all the speakers are speaking, so thank you very much. To speak straight to the matter, because the organization, because the co-working spaces, the hubs, these community-driven entrepreneurship support organizations, because of the way you are structured and because of the way you operate, you would tend to sometimes have more credibility. And can you lend your credibility to these women as a means of support? That's something you can do. We found that with creative space startups and even through the Growth for Her program, because we were 3-4 organizations coming together to do this, our word collectively had more power. And because, for example, now the African Development Bank had added their voice to our own, when I went to a bank and said, oh, I want you to come and speak to my women about funding opportunities. And these are a few women that I think qualify for XYZ programs in your bank. They took it a little bit seriously because then there was credibility, as opposed to this one woman walking into the bank to do this all by themselves. That's one thing that I think we can do. The second thing that we can do is something that Christine has mentioned, which is because we are the ecosystem and because we are designed as a different sort of business, some of us offer consulting services, some of us are the arms through which a lot of these funding institutions and more structured institutions deliver their CSR. Can we sit down with the banks, and which we do sometimes, can we sit down with financing institutions and the owners of resources to understand what they are looking for and be able to co-create programs that speak to their needs while also understanding the needs of the women in a way that they don't? That's the second thing that we can do, because I honestly think that, and I want to say this for the record, and I hope that this is the bits that you people post, banks need to stop doing accelerator programs and incubation programs. I'm sorry, it's not the place for it. There's a place and a time. It's not it. Nigeria is not, no, thank you, God bless you. No. Work with entrepreneurship support organizations, work with Andy. Andy has a network of entrepreneurship support organizations across the world, across West Africa. They understand these women in a way that you will not be able to understand. And how can you work with them to co-create something that actually drives the impact that we want to see? Right? There's a place and time for everything. Everybody needs to know their role. And you know, in the triple helix, what's it called? My brain is a bit fuzzy now, where everybody, there's a role of government, there's a role of research and development, there's a role of private sector, there's a role of university. Everybody has to play their part so that we can rapidly advance to where we want to be. And the last thing I'm going to say, because I don't know if this is the final wrap up we're doing because of time, the last thing I would like to say is everything takes time. We are tired. Everybody is tired. I'm very serious. I came to this webinar because it's Sharon and because it's Sociocapital, because I am tired of getting on stages to talk about women and women businesses. I'm really tired, and I just really want to work, and I really just want to meet with the people. And I understand that. Therefore, I also know that it takes time. And we have to be proud of the work that we do in this moment, because it lays a foundation for the next generation of women businesses and for the next generation of financing institutions. I know we are not many on this call, but I know that this moves the needle, even if it's an insignificant way, but this moves the needle. And like I always used to say in conversations like this, if anybody knows the GPS location of where the needle is, tell us. We can gather and push it fully, physically. Thank you.
Thank you, Grace. Thank you, Grace. I see you raised your hand. I'm sure you wanted to speak.
Because, you know, listening to Christine and listening to Grace, and I know we are the ones who are supposed to answer questions, but I want to make a comment. Before I make that, I want to ask you a question. These accelerator programs, all this readiness that do you have guarantees that when these women or business owners complete these programs, is there a guarantee to accessing funding capital? Did you get my question?
Yes. I get your question.
So do you want Grace or myself to answer?
You can answer.
Grace, please.
Thank you, Fosa, for your question. I want to answer this question in a yes and no way. Yes, I can guarantee that if women go through the program and do the work that needs to be done, they would be credit ready. No, I cannot guarantee it, because there are systems that already exist that make it very uncertain on if this woman is going to access funding or not. But we have seen through research and through the work that we have done, and some of the statistics Christine mentioned in the beginning, that when women actually do the work in structuring their businesses, in improving the tools that they use in their businesses, they are actually able to access finance, and they are actually able to build businesses that grow beyond what we even imagined that it could be. I've been working with women entrepreneurs now, I think 9 years. And I can tell you for a fact that we have seen women that in communities that sometimes did not even have understanding of how they could access certain markets, access those markets and be able to grow and be able to access finance, right? It takes time. The problem is always that somebody believes that it's not, the way my mother used to say, it's not hunger. The only thing that stops immediately is when you're hungry and you eat, it's satisfied, you're not hungry anymore. But it's no guarantee that if you finish the program today, you're going to access funding today, because there's a lot of work to be done, which is why I said in one of my interventions, it's a journey and not a gate. But yes, entrepreneurship support works. We've seen what it has done for the tech ecosystem. Without hubs, without the CC hubs, and without the Lofty Incs, and without the Sociocapitals, the tech ecosystem in Nigeria would not be what it is. So it works, it's brought value, and there is room for us to do more, but we're doing a great job as well. Thank you.
Thank you. Thank you very much, Sharon.
Thank you.
Sharon,
So
can you
let me
confirm you
just
can hear
add,
me?
yeah. Yes, I can hear you.
Okay, go ahead. Go ahead.
Yeah, so just to add, as she had mentioned earlier, that's where sometimes some of these ecosystem support organizations come to give credibility to these women who have completed these accelerator programs to be able to access some of these funds. And because a lot of times, as she said, as a single business owner, you walk into the bank or you look for a funder, you won't necessarily get audience. But in avenues where there are other ecosystem organizations that support entrepreneurship programs, you find opportunities where women businesses are able to access, or they're being groomed or put together to be able to access some of this. Christine, please go ahead.
Thank you so much. And thank you, Grace, for your wonderful insights. I wanted to mention, I mean, connecting to the question Ifua asked, because I know that majority of these entrepreneur support organizations program that they offer are funded, but we also have some that are not funded, that they charge these women entrepreneurs to participate in. Now, in such situations, and especially going back to the challenges, the underlying challenges that these women entrepreneurs face in accessing this program, one of the things or one of the models that I think these ESOs can implement is something like a fee for service, where they are telling these women entrepreneurs that, okay, participate in my program, and once you're able to achieve this, then maybe you pay the other half of the money for the program, or even the entire, or they could even create a model where they divide their services into two, those ones that are very technical and those ones that are basic. And for the basic one, they can offer it for free, because of we are all trying to support women entrepreneurs. And those other services that are more complex, they can now say, okay, maybe they can offer it at a cost that is affordable to these women. But that way, these ESOs are able to communicate their value, because even looking at Andy research on Global Accelerators Learning Initiative and the SGB Evidence Fund that sought to look at what makes business development services effective. We saw that, yes, these BDS providers are effective, but the problem is they are not aware of the best practices. So at the end of the day, they do not achieve intended result at the end of their program. So the point is, we're looking at these approaches and seeing how we can better support these women entrepreneurs to access support, at a very affordable rates, also building their resilience and their ability to be localized and, you know, strengthen their ability to be able to raise capital as well as enable their businesses to scale. Thank you.
Thank you very much, Christine. This discussion has been quite insightful, and we hope that we can take it beyond this platform. So because we are almost out of time, I would just like final words from each of us. Let's start with you, Ifwa, then Grace and Christine. Thank you very much.
Thank you very much, Sharon. And you can hear me, right? Because the bandwidth is a bit low.
Yes, I can.
Having some bit of a stop where I am. So, I mean, thank you so much. And my final word would be that the next conversation I want to have with a banker or owners of resources is enough of credit score. Let's have a conversation around what would probably look like a resilience score. Because, you know, the phrase credit score, very traditional, quite restrictive, quite narrow. So let's see how we can build, you know, access to capital by measuring, you know, our resilience performance of female business owners. Because, and then the question asked earlier on about, you know, the trainings and all the readiness programs and accelerator programs. Because I like you said, I see that these things should be tied to a pool of capital. And I think that, you know, everyone who completes the program, meets the criteria, should get the capital. You know, terms are already sorted out before the training, and no extra vetting unless there's a significant red flag. So we need to actually, you know, have meaningful and intentional steps occur if you want to ensure that this 42 billion gap, you know, a lot of it comes to our women in our ecosystem. And, you know, we would have issue where you complete the program and you have guaranteed capital. So I thank you very much. And I think that we should, I want to leave here with the fact that I would have a conversation going forward about measuring resilience, if you like it, a resilience score of some sort, as against credit score. So let that be my final word for women-led businesses. Thank you.
Thank you very much. Grace, over to you.
Thank you, Sharon. Thank you, Fosa. I like what you said about resilience score. And I like what has been said in this conversation today. I think that there is a place for everybody in the ecosystem. And like Fosa has rightly pointed out, if we entrepreneurship support organizations work with funding institutions and work with enablers like Andy, then we are able to co-create programs that actually do drive the impacts that we all collectively want to see in the ecosystem. And I want to mention that for the framing and for the narrative, and I really love, and I want to shout out to the Sociocapital team for actually saying that the $42 billion opportunity. There is a $42 billion opportunity on the African continent, and that opportunity lies in the hands of women, and that opportunity can yield, I need to do the math on how many X it is, but it could unlock up to $600 billion in the African economy. What does that mean for us? And what does that mean for our livelihoods? And what does that mean for our communities? Because a lot of times we isolate it and we look at it like it's a women problem, but it's not a woman problem. It's a community problem. It's an economic growth problem. And if we really want to become a continent that is self-reliant and self-sustainable, then we have to look for where the opportunities are to invest in ourselves in order to grow. So I want to thank you for the opportunity to have spoken today. You brought me out of a very long slumber of not speaking. So thank you so much for this. And it's been really great sharing the stage with you, Efosa, and with you, Christine. I've learned a lot. I'm really happy and honored to be here. Thank you. And to everyone that is on this call and to everyone that will watch this, my call to action is support a small business around you, a growing business around you. Buy from them, offer them constructive feedback, don't say, your brand, no. Offer them constructive feedback, support them. If you see a way that they could do something better, tell them. buy from them, promote their business, even if it's just posting it on social media, refer them to somebody, speak well of them when you're in places that matter, because it's only together that we can be able to really drive this. Women have always been around about community, and we thrive in communities. And I know that the way we will get on the other side of it is through the power of community. Thank you so much for this opportunity, Sharon.
Thank you. Thank you very much. Christine, over to you.
Thank you so much. I mean, I've been using Zoom for a while now, and I'm still falling victim of not unmuting. But anyways, thank you so much, everybody. I'm honored to be here. I'm honored to speak alongside Grace and Afua, as well as Sonia. It's been a wonderful and insightful experience. My final comment is just to mention that the key is coordination, the key is alignment, the key is, you know, us understanding what the problem is and working together to solve that problem. We've spoken and we all understand what the issues are. What are we going to do next? I know I always say something that it's not just about talking, but about action. How can we, you know, begin to collaborate to say, okay, can we develop a fund, or can we develop a program that supports businesses, or can we even coordinate or you know, communicate or create a space where we bring together all the actors, including investors, DFIs, ESOs, academic institutions, you know, everyone together in a space to address such issues. Even recently, during our annual conference that happened in Mexico, you know, we did something, you know, similar to that. We brought together all these ecosystem players to talk about all these issues and come up with reliable solutions. So I just want to say that let's stop talking and let's start acting. Let's do something about the issues that we've talked about today. Thank you so much.
Thank you very much, Christine. You took the words out of my mouth. As part of my closing comments, I was going to say, we have the important people we need in the discussion today. Why can't we do something? Let the action begin with us. We can come up with something with which we, as you mentioned, bring all the ecosystem actors and the stakeholders into one room and come up with that co-design or co-created solution and move forward with it and implement it in diverse ways. So I think that we could take the discussion further from here and see what we can all do together to move forward. Thank you very much for giving us your time. I appreciate it. I will hand over to Linda to do the final closing. Just probably, unfortunately, we may not be able to take questions and answers, or I might as well just wrap up the session here since it's 1 o'clock on the dot. So once again, thank you to our participants our guests who took out time to attend and be patient with us throughout this webinar. We hope that you have a blissful weekend. Thank you very much and God bless.
Thank you all and bye-bye.
Bye.
Thank you. Bye.
Bye, everyone.